Welcome to the Money Show, where we take the mystery out of managing your money one step at a time. I'm Kavita Thapliyal, and whether you are just starting to think about your finances or you're a seasoned investor looking at the latest strategies, the Money Show is your go-to guide for making smarter, better financial decisions. From the stock market buzz to personal saving tips, from retirement plans to tax hacks, we are here to decode the world of personal finance in a way that's simple, clear, and most importantly, actionable. Today, we've got an exciting lineup of expert insights, practical tips, and your burning financial questions answered live. So all you have to do is just grab your notepad, because when it comes to managing your money, every tip counts. On this show, we also answer your portfolio queries. So just in case you have any question which is related to your mutual fund portfolio, you can WhatsApp us your question on 865-797-4571. We also have an email ID where you can send across your questions. The email ID is themoneyshow@etnow.tv. Alright, so that's the show for today, and let's begin. India's mutual fund industry continues to break new ground. Systematic investment plan, or SIPs, inflows have hit yet another historic high in June, now crossing 27,000 crore mark for the very first time. This is not just a number, it reflects growing retail participation, strong investor confidence, and the rising financialization of savings. Now, month after month, the SIP story has become more resilient, more mainstream, and more deeply rooted, especially across the tier 2 and tier 3 cities. So what's driving this bullish sentiment? Are investors showing blind faith in equities, or this is a reflection of a mature, disciplined investment behavior? And as markets flirt with record highs and valuations remain elevated, the big question is, can this trend sustain? Now, to unpack all of this, we are joined by someone who has had a ringside view of India's evolving investment culture, Mr. D.P. Singh, Deputy MD and Joint CEO of SBI Mutual Fund, one of the largest fund houses in the country. Mr. Singh, thank you so much for joining us today. And yes, the very first question is the sustained momentum. I mean, I would like to congratulate the industry and definitely SBI Mutual Fund's role over here. 27,000 crores, I mean, we've crossed that figure in terms of SIP inflows with this June, a fresh record. What's your view, as far as the consistency is concerned, and the scale at which also it's going up? Is this largely retail driven, or are we seeing other segments participating as well?
Thank you, Kavita ji. Thanks for having me on the show. And definitely, it's a moment of pride for all of us. Then when the numbers came in 27,000 crore plus, this is, as I keep on saying, it's a global success story where Indians are investing into equities in a very, very disciplined manner. And to your another question, whether it is mostly retail or what, no, it's definitely majority means 99% it's retail only. Very few numbers which can be contributed by the institutions, etc. But it's absolutely retail, because the ticket size itself is around 2,400, 2,500, less than $30 what we can talk about. So this is a great story, and it's continuing. It, of course, gives a lot of confidence to all the participants that Indian retail is going to stay in the market. And yes, the cautious approach of investment is something which industry is taking care of. The more work to be done by the fund manager, more the solution-oriented funds like the hybrid funds, etc. So as the overall money which is being brought into the SIP route remains insulated from the future outlook. Insulated, not 100%. Of course, it cannot be, but the downside can be limited for the people. But cost averaging is at the best display, and this is very, very good news for all of us in the industry and for the investors.
Definitely. Let's just talk about the market valuations at this point in time, and also the SIP discipline that we are looking at. Now, given the elevated valuations and stretch indices, are we seeing any behavioral change among investors? Do you think that there is a risk that retail money may turn jittery if markets correct further? Or you're saying that we have crossed that phase, and now investors and the markets have really matured, and now that thin line which investors really needed to understand whether you should be stopping your SIP when the markets are going down, that has really gone erased, and a new mindset for investment is emerging. How would you like to help us understand this?
I mean, one thing we have to understand, Vijay, we are a huge country, and we are having 140 crore population. And when we look at the numbers and the ticket size, I don't think there's much at risk because new people keep on coming and old people keep on going out. And one more thing we have to see is when we talk about the equity inflows. The numbers which you are showing at this moment is 23,587 crores, and SAP is 27,269 crores. So the net number, net of the trigger, SAP trigger is still negative, right? So that clearly shows the whole lump sum money is not coming. Valuation is a worry, but the small investors on ongoing basis, they keep on putting money, and they are there for long term. The long term story, the long term investments, disciplined approach, I think is at the best display. I think we are lucky to have it, but it's nothing to worry because the whole money is coming in a very structured manner with the small ticket size coming. And when the valuations become more attractive, to say so, I think SIP amount can be topped up, can be done. Even now, most of the people are putting money in the range of 2,000, 3,000, 4,000 only, which is not a big amount with the kind of economic growth which has happened in the country. I mean, actually, if you index it for what was coming 5 years ago and what is coming today, it's hardly any difference, and that's a good thing to note.
DP sir, investor demographics. Now, where is this growth coming from? Are we talking about tier 2 and tier 3 cities continuing to lead the charge? Is that the case?
As far as tier two, tier three cities coming, they're putting money. Yes, there's a lot of money which is coming there, but even the big towns are not staying out. Even they are putting money. The ticket size in the bigger towns is much higher than the money which is coming from the smaller towns. But yes, the availability of digital tools, the digital platforms, robots, etc., they have made it possible that the investor all across the country, they can put in money as and when they want, and it has become much easier. And do it yourself customers, our numbers is much more than coming through the distribution channels. Going forward, this trend is changing. I think that is something we need to note.
Uh, okay, let's also look in the investor interest. We are seeing investors being heavily tilted towards hybrid and arbitrage. Now, how would you like to explain this kind of an interest coming in?
See, two things. Arbitrage is something which is happening for the people as a proxy to liquid funds and the money market funds, because of the obvious reasons. These funds have been giving good returns as a proxy to saving bank account or 1 year 6 months FDR. So these are continuing to be in focus. But when we're talking about SIPs are not coming in arbitrage fund. Arbitrage lump sum money is coming only in arbitrage fund. That since arbitrage comes in the hybrid category, we generally see that hybrid inflows are much higher than the other inflows, and there's uh, good numbers coming from the institutional clients also, or big ticket clients as well. As far as other hybrid funds are concerned, yes, all the credible players, all the in the industry also, we are also pushing in SBI Mutual Fund in a big way. We want people to start their journey who are yet to come through conservative hybrid funds or balance advantage funds or multi-asset allocation funds. So that is the reason, that is the responsible behavior of the fund houses, that as whatever push is required, we are pushing the hybrid funds, because we also understand the equity valuations are a little elevated, and we don't want our investors, the customers coming from various other distribution channels, they should not burn their fingers, because we have seen in the past 3 or 4 times it has happened. People come at the wrong time, and then when they run their fingers, they don't come for decades together. But today, everybody is coming. Most of the people are coming in a very disciplined manner. That's a music to our ears.
TP sir, do you think 30,000 crore monthly SIP milestone is now within striking distance in FY26? How would you explain this? Also, what are the internal signals SBI Mutual Fund is picking up in terms of investor sentiments now?
See, 30,000 crore is a number, right? Number is a number. Today we are close $3 billion. If I put in other ways, they're
True.
getting $3 billion every month, and in a very disciplined manner. That means $36 billion coming through the SAP route only. So that's a number which is very credible number from international standards as well. Whether it crosses 30,000 or doesn't cross 30,000 is just a matter of time, but it has to happen. Whether it happens before March or after March, that's a separate story.
Also, how important it is now for mutual funds and distributors to ensure proper handholding and education, especially for the first-time investors entering via SIP during this bull runs now.
See, what I feel is that they have to take the cues from what is the industry body is doing, what AMFI is doing. AMFI has started talking about the hybrid fund, AMFI has started talking about the debt funds. The fund houses are pushing, in most of the cases, they are pushing the hybrid funds like balance advantage funds or multi asset allocation funds. So these are the things which need to be picked up by the distributors as well, by the intermediaries as well, because we feel that at this such a time when 27,000 crore is coming and majority of that coming into equity funds, now there's a time to move towards the hybrid funds, and especially where the equity portion is in the range of 30% to 50% kind of thing. So those are the, when I'm talking about the real equity investment, not talking about the arbitrage portion. So those are the funds which we should remain in focus, and joining hands together, giving the one narrative, one uniform message to the investing community is something which is very important. And distributors have the maximum responsibility of handholding to the investors, because sometimes investors may not be aware about some of the nitty-gritties of the fund, but distributors definitely are supposed to be. It could be bank, it could be national distributor partners, it could be IFAs, it could be robos. Actually, I feel at the robos, the education is much more required because there's no interaction generally. It's everything is on digital tools. I think more content, more investor education content is required to be put on the robos platforms.
All right, sir. Thank you so much for taking time out and helping our viewers understand the SIP numbers, and also the way investor sentiment is maturing and getting more financial portfolio or investor education way. Thank you so much for taking time out.
Thank you, Gopal. Thanks a lot.